Good morning, everybody. This is Eureka John with Eureka Street Crypto Hub, broadcasting live from Leander, Texas. It is June 23rd, 2021, just cruising through this month. It is 6:37 in the morning. It's a Wednesday, so I don't have to commute down to work today, so I'm a little bit later broadcasting on Wednesdays. Normally I'm on, I guess, during the regular weekdays around 5:30ish or so. I don't know. It just varies. I just get on when I feel like it. Anyway, this is my video blog. Nothing more and nothing less than that. And I'm just talking about my crypto experience and things I discover daily in the crypto world. And this is all my opinion. I'm not your teacher or your financial advisor. I may be wrong about some things one day and then right about them the other, and vice versa. And I'm not shilling anything. I'm not paid by anybody or sponsored by anybody. So if I do talk about something, it is completely without, it has bias because I might like something, but other than that, here on CoinGecko, they added a little buy button on Bitcoin and Ethereum to their main page here. I want to see where it takes me. It takes me to FTX. Wow. Okay. So FTX is now a sponsor. FTX is growing pretty large. It's interesting. We'll see where FTX takes it. I might have to go ahead and get a membership or get signed up for FTX Exchange just to have it handy. And I always like to jump in protocols. I might not be like super active on it further in the future or whatever, or use it every day, but I like to jump into protocols and learn the levers and pulleys, learn the interface, see how it works, try it out, and just kind of give it a whirl. If I don't like it, then whatever, I'll kind of forget about it. But if I do like it, then I will, continue on with it. And why did I click on Ethereum? I was just trying to get off. It was kind of stuck on that little ad. So anyway, Ethereum is at $1,990.49. It's gone below 2,000. So, everybody's freaking out, it's a bear market, and all this stuff. Like I always say, when in doubt, zoom out. And, a lot of markets go through this. The crypto in general has gone through all these types of retraces. And in general, I just believe in cryptocurrency as a whole. I believe that is the macro picture is everything is moving towards cryptocurrency. At the beginning of the internet, Amazon and Pets.com, they both, went up in price and they crashed down, and then Amazon kind of decoupled and went back up where Pets.com was left back in the dust. But a lot of this stuff will settle out, and it's just, it's just the process of growth. It's the process of innovation. And, I do believe a lot of this stuff, it will be, left behind. So I'm trying to do my research and make some of the right choices as far as altcoins are concerned. But I do believe Bitcoin and Ethereum are here to stay. But take a look here at this Plan B graph, the stock to flow model. And this is one of those models that a lot of people just kind of go by. Hold on, let me move myself out of the way here so you can see. Okay, so this is just the basic pattern of the stock to flow model. This is 2017, I believe. I don't know. Okay, so then here in 2019, the dip out of so this is the stock to flow range right here. And people get a little scared whenever things start to go out of the stock to flow range. And dips down March 2019. This is the publication of the stock to flow model, and then it's just followed along this trajectory, and it's predicted to keep on along this path. And so far, the stock to flow model has been pretty accurate. A lot of people have varying opinions, even for me, and this is Plan B, the maker of this stock to flow model. It is always a bit uneasy when Bitcoin price is at the lower bound of the stock to flow model. Will it hold like March 2019 when I published stock to flow, or March 2020 COVID, or September 2020 with Bitcoin stuck at 10K? And is this another buying opportunity, or will stock to flow be invalidated? So down here, just various opinions. I believe that the model is still correct. What I don't understand is why Bitcoin maximalists don't diversify their investments. Yeah, neither do I. Personally, I think it would take years to invalidate. I don't know if it's invalidated maybe after 4 years and if it's going in another direction. And then Plan B says, no, that is not true. Stock to flow is a simple linear regression. Parameters, stats, and bounds are in the article. Everyone can replicate and verify. I will call stock to flow invalidated if we have not reached 100K by December this year, and we cannot stay at current levels for the rest of the year. So if you really want to know we will hit 100K this year, and a good thing to do is study the stock to flow model, study the origins, study how it is put together. I did kind of a ragtag video on stock to flow model a while back. Obviously my understanding of stock to flow model is not really, that high, but even the maker of the stock to flow model is saying, there are flaws, and we're just testing this out. But a lot of people follow stock to flow like it's some kind of religion. Even the person that established stock to flow is saying, all models are imperfect / wrong and have deviation / estimation error because models are simplifications of reality. Admittedly, stock to flow deviations can be very large because stock to flow model only has one input variable, which is the stock to flow ratio, and there are hundreds of other factors that impact price. And that is absolutely true, and especially right now, there are so many things right now impacting the price, including El Salvador, even Elon Musk and his dumb tweets. You have China banning cryptocurrency. It looks like Iran has banned cryptocurrency as well and is shutting down miners. So what else is new, right? But like I said, this is a technology, and everything is pushing forward with innovation, and are going to be ups and downs and pushback and adoption and regression, and it's just what happens with everything. Right now, Ethereum, this guy's tweet, so many projects are talking about building an Ethereum bridge. Yes, Ethereum is down at 1900 now, but you have tons of projects that are integrating Ethereum. And like, for instance, Theta Network is just making everything compatible with Ethereum. You have Cardano creating compatibility with Ethereum. Now you have Kava with a Binance bridge, but you have Kava and Ethereum bridge right here. You have all these projects. You have creating some kind of compatibility with Ethereum. If there are that many projects in the crypto space creating compatibility with Ethereum, it shows that Ethereum is not going anywhere, folks. Oh man, I don't know. But yeah, and then here's another article too about fiat currency. For today's markets newsletter, I wrote what will form the introductory remarks to the first ever Fiat Week conference. It's an important message that I hope spreads far and wide. Bloomberg account newsletter. Okay, so let's see here. The rise of crypto has brought new awareness to fiat currency. It makes sense. The first time in a fish's life where it ever thinks about water is when it's flapping around on a boat deck gasping for oxygen. 1 second here. Let me pull out the chat bar. Just in case I get some of the regulars jump on. Okay, so yes, so the first time in a fish's life where it ever thinks about water is when it's flapping around on a boat deck gasping for oxygen. It's only through the introduction of some seemingly oppositional force that we become aware of the world we're immersed in. And this isn't just conjecture. You can see it in the data. A Google Trends chart for Bitcoin looks almost exactly like the chart for fiat currency. Fiat currency is I didn't know what fiat currency was before I got into cryptocurrency, and I didn't know anything about finance either. So this is all, you can imagine the amount of people that cryptocurrency is suddenly making aware of the actions of the Federal Reserve, of finance, of the debt and the inflation that is happening. All this stuff has been going on in the background, unawares to the majority of the population up until cryptocurrency. And cryptocurrency has been a blessing in the fact that it has educated people, even if it's done in a sink or swim, trial by fire type of way. It has made people aware of fiat currency, the Federal Reserve, money printing, quantitative easing, inflation, all the shell gamery, and flim flam, whatever stuff that the government is doing to us. and keeping us enslaved under the dollar. And we're becoming aware that we do not have to be enslaved under this fiat currency trash anymore. So let's see here. We've been swimming all this time in the world of dollars and yen and francs and pounds, and so we haven't had the chance to really think about fiat currency, and it shows. So many people's mental models of money are rooted in gold standard thinking. People talk all the time, for example, how we're going to debase the currency, but that word makes no sense in the fiat realm, as it logically relates to the concept of making a gold less pure by degrading or adulterating its substance, as if the dollar were old Roman coins that had less silver content over time. I didn't know what debasing currency was before cryptocurrency. Debasing a currency. Okay, you see on a quarter, there's that little copper line or something that goes around it, or in Roman coins back in the days, coins started off as thick, and it represents, say a quarter represents 25 cents. Well, a quarter over time, that line in there may get bigger and bigger, but the actual silver content or whatever, I'm just figurative. I know it's not made of silver, but gets thinner and thinner. Or the Roman coin starts out thick, and it may say, whatever Roman currency is, and denarii. All right, it may say 1 denarii, and but that 1 denarii over time gets a little thinner and a little thinner and a little thinner, or coins with holes in the middle of them, to keep it on the strings or whatever, like the Tibetan coins. That hole somehow gets a little bit bigger over time. That is debasement, and we have had debasement up until the point of fiat currency, where it's just not based on anything. Let's see here. Let's see what this graph says here. Julio Claudian says, fineness of early Roman imperial silver coins. So I guess it goes throughout the history of the Roman Empire. It started off with the Julio Claudians that, it was pretty much 100% pure. And then look, over time, it just kind of, and then you have right here around the Civil War, they had to go back to their standards, so it went back up. And I believe right around this time is whenever they were messing around with the currency, and people were back on a barter system for a while, and then it went back down, back down, back down, back down. Anyway, so yeah, interesting graph there. Numerous conversations about money printing or how we are going to pay for it. Let's see here. Have an implied basis in gold standard thinking. Like somehow we're going to run out or be forced to go cap in hand around the world looking for generous donors. With any luck, the surge in interest in fiat currency, which again we have to thank for crypto, gets us to think more deeply about it and how currencies whose value is rooted in law and public convention have different characteristics than what came before and what's come after. So just some interesting thoughts right here. It made me subscribe to the Bloomberg Markets newsletter. So let's see what some of the comments have to say about it. Okay, let's get this in view. Let's see. All right. Okay, all right. So anyway, I don't feel like thumbing through the card. Okay, so good article, Joe, but it's pretty much a rehash of the main chartalist MMT talking points without admitting it. Also, why would people be in a gold standard world when that world hasn't existed for about almost 50 years? Finally, debase is not only used when discussing money. True, A, and then B, clearly the 2A definition is where the word comes from. Well, I mean, I think a lot of people are still living in a gold standard world because they don't understand or even want to think about the fact that our money is not backed on jack squat. So, yeah. Hey, what's up, Bardowski? Too? Nice to see you on here. Yeah, so I'll give you a crate here. Anyway, so that's just fiat currency. I've learned a lot about that since I've gotten into crypto. It's gotten, a lot of attention, and the Federal Reserve, I think, and the IRS even have gotten more attention than ever by people suddenly being like, "Hey, wait a minute." So let's go back up here to the charts. All right, so Bitcoin's at 34,033.73. Ethereum 1991.07. Tether is still in third place. So you have Tether, USD, and Binance Coin, 3 stable coins in the top 10, which is interesting. And then you have Binance Coin 291.81, Cardano $1.25. Cardano stayed above $1, so it's been interesting to see that. XRP at 63 cents, the Doge down to 21 cents, Polkadot 1602, Uniswap 1786, Bitcoin Cash 470.74, Litecoin 128.87, Solana 30.97, Chainlink 1860, Polygon Matic 119, Theta Network 706. So Theta Network is about to come out with Theta 3.0. I'll be interested to see what happens with that. T-Fuel is working its way up. It's in spot number 35. T-Fuel is the utilitarian token, the utility token of the Theta Network, and Theta Network is the governance token. So T-Fuel is the oil of what makes that network work. Okay, so I said yesterday I would talk about Pool Together. Pool Together is one of those DeFi apps. It was actually one of the first DeFi apps that was built. And let's see here. Let's go to the main page. All right, so... Okay, so Pool Together is just basically a lottery system, and I put $5 in this like 2 years ago. I haven't won anything, and I don't even know what wallet I used to put it in there, so maybe I did win something and I don't know it. But basically, you put money in, and you let it sit, and it gains interest, and you can pull it out at any time. So it's not just like buying a lottery ticket to where you lose your money the second you buy the lottery ticket, and then when the lottery happens and you don't win, you lose. So it looks like I believe they said $80 billion. Hold on, let me see how much. I always go to the FAQ section whenever I go to a website. It's one of the first things I do once I kind of get the general gist of what they do. But it was on the dev page, I believe. But anyway, I can't remember it, but it was a huge amount of people that spend money on lottery tickets every single year, and but 40% of the people, are struggling to pay their bills, and so it's kind of, why are so many people dumping money into lottery when they can't pay their bills? And to me, that's why I'm not into lottery systems, and I just, it's not my shtick, man. I just, to me, it's a waste of money. But some people love that type of stuff. They love to be able to have the chance to, that it's kind of like a superstition. I've known people whose moms, every time they go get gas, they get a lottery ticket too, and it's just part of their daily life. I know up in the north, people buy at bars those little lottery pieces of paper things, and it goes on the screen, and they love participating in that. That's not been something that I've ever been interested in doing, but I was interested in the DeFi aspect of it, and threw $5 in. But what happens is when you put it in here, it's just like any yield savings account in crypto. Like this is based on Yearn, Yearn Finance, and Compound Finance. So both of those are two well-established DeFi lending and borrowing protocols on here, in which you can save your crypto and earn interest on it. And it uses those platforms, and everybody everybody contributes their crypto into these pools, and they get the tickets in return. And then once a week they draw from that pool, and then the money earned on the interest is the person collects all that once a week, whoever wins for that week. So get tickets, deposit into any prize pool, and instantly get tickets. As long as you have deposits, you're eligible to win prizes. Prizes are made up of all the interest earned on deposited money in the pools. And then never lose. Remove your deposit at any time. As long as you stay in the pools, you continue to be eligible to win. Pool Together protocol is controlled by pool token holders. So there is a governance token. There wasn't 2 years ago, I believe, when I first jumped in. But that was when it was first starting out. All changes to the protocol are submitted and approved. The protocol automatically distributes the pool token to anyone who deposits into the protocol. So this is all based on a smart contract. Pool Together it is not a company. It is a protocol. It's an open source and decentralized protocol that is provided on an as is and as available basis. The protocol has unique risks associated with its use. It's important to understand these risks before using the protocol. And these risks can be smart contract exploits. Somebody could hack it, just like any application built on Ethereum. There's always the risk of a hack, and that's why they run it through audits, and they use third-party audit companies. I believe Open Zeppelin audited the code as well, and Open Zeppelin is reputable. And then there is the risk of hack through Compound Finance or Wirearn or whatever pools they use. And I do know that Compound Finance, they had a Oracle exploit, I believe, and this was well over a year ago, so it's been a while. But they've corrected that since then, and Compound Finance is one of the most reputable DeFi platforms in the crypto space. So I don't think that there's too much to worry about. Depends on what your risk tolerance is. But yeah, so let's go in here to the docs. They have pods too. So if you don't want to do this by yourself and you want to increase your chances of winning, but then have it done as a pool, as a pod, basically, you can jump in with other people into a pod, and it splits the winnings, through everybody in the pods. I mean, I don't know if I'm gonna do this. I'm gonna just try to win the whole thing and not do a pod. But a pod is designed to distribute prize pool winnings, i.e., tokens and tickets. Secondary awards loot box are liquidated and converted to underlying balance. In other words, if a pod contains 1 million tokens, for example, $1 million worth of USDC split evenly between 10 depositors, that's 100,000 each, and the pod is awarded 50,000 pool coin USDC. Each depositor will have their underlying balance increased by 5,000 USDC, 10% of the total winnings. Distribute of non-ticket winnings such as external ERC and ERC 721 tokens is handled via liquidation. Okay, so interesting. Example, all winnings are ultimately available as a deposit token. Okay, pod awarded 50,000 ticket prize, pod awarded loot box. Okay, pod liquidates loot box asset into underlying asset, and then underlying asset distributed across pod holders. Okay, so basically it just distributes across all the people in the pod instead of just to one winner. And then this is, see, look, as you can see here, it has all the code, and this shows you how to, if you want to add something like this to your website, you can use all the code here, and it's all available on GitHub. This is the beauty of open source, and you can build into whatever company or application or thing that you want to do all this code base and build your own pool together, like a lottery thing. So Pool Together is not a company. It's a decentralized protocol for no-loss prize games on the Ethereum blockchain. The protocol enables developers to build their own no-loss prize games, and it offers governance-managed no-loss prize games. Prize games are pools of funds whose accrued interest is distributed as prizes. This concept is well established and otherwise known as no-loss lotteries or prize savings accounts. All prize games created by the protocol share the same key characteristics: no loss of deposited funds, ability to withdraw at any time, and fair prize distribution according to a prize strategy. Prize games can be differentiated in the following ways: the yield source and the prize pool uses to generate the no loss return. In this case, it would be Compound Finance or Wirearn. The prize strategy used to determine frequency and distribution of prizes. In this case, it's once a week. You earn the yield goes to one winner, or if you're in a pool, it goes to everybody in that pool, or the pod, I'm sorry. And then the additional rewards offered by the prize pool, that has probably changed since 2 years ago. The asset type the prize pool accepts for deposit. You can do DAI or USDC or fairness parameters. Okay, so let's take a quick look at the interface here of the app. You go over here like all Web3s, and you connect your wallet, and you connect your MetaMask wallet right here. You can connect, hold on, let's go here, change account, and this window will pop up, connect wallet, and you can choose, look at all these wallets you can choose from. Oh, I didn't know Opera had a crypto wallet on it now. Okay, cool. Well, look, you learn something new every day. So I have Trust Wallet. I have a bunch of different MetaMasks. I have Wallet Connect. Wallet Connect is through several others, so this splits it up even to more wallet choices here. I have a Coinbase wallet, so let's just connect this to my Coinbase wallet. I've already scanned the Q code, but normally if I hadn't done that before, a Q code would pop up and I would go on my phone and I would scan it with my Coinbase phone app, and then bam, it connects. And obviously I don't have anything in any of these pools right now. I don't know where that $5 a DAI went. So you would have to go get USDC or DAI, or you can deposit Sushi or Compound token. You can do it with a pool token. Badger, okay, Uni token, Tether, and Gemini, so stablecoin. So obviously the biggest prize here is for Ethereum. You know, now's a good time to do this stuff. Ethereum went through a huge lull for a while. Whenever the gas fees were so high, you couldn't do anything. And that reminds me too. Hey, what's up, Randy? It reminds me that if you are going to do anything with a smart contract right now, I would probably do it now. You know, like I've been taking some things that were stuck in some protocols and pulled them out and moved them around and, you know, swapped them for things and streamlined my portfolio a little bit because the gas fees have been so low. While the gas fees were so high, it kind of sucked because the more I learned, the more I'm like, oh, well, that's not a good strategy. I want to move over to this other strategy over here, but I haven't been able to because stuff has been stuck in smart contracts. It's because the gas fees are so high. And because I'm learning the levers and pulleys, you know, of this stuff, I'm not depositing a whole lot into these smart contracts. I'm just doing a little bit just to kind of learn how it works. But with the high gas fees, it was kind of removing that opportunity for people to learn how things work. And, you know, they kind of had to just completely ape in and jump into it. But when I first jumped into Pool Together 2 years ago, gas fees were cheap back then. Even though people back then were still bitching about gas fees. But either way, the gas fees went up. And I didn't want to pull $5 out, you know. And then I had, you know, stuff in Ocean Protocol and Acropolis and, you know, all this other stuff, and I couldn't pull it out. So finally, I've gotten to the point where I've pulled some coins out. But now you can jump in and you can do this Ethereum pool. That was my whole point: is you can jump in this Ethereum pool and use this protocol without a bunch of gas fees. So if you want to experiment around with Pool Together, it might be a good time to do it. Like I said, the whole lottery thing is not really my shtick, but you know, some people love it, and whatever, you know, more power to them. Hopefully they win. The community pools here's the pods I was talking about. So the weekly prize would be $3,780 in the Ethereum one, and that would be split as to how many people are in this pool. Let's see how many people are in this pool. Heads up, a prize pool was created by a member of the Pool Together community. Anyone can create a prize pool. So if I wanted to create one with possibly another token, I could do that. So it looks like if this pool wins, the grand prize is everybody gets $189, it looks like. Loot box, vision token. Let's see. I've never heard of vision tokens, so okay, well, yeah, all right, let's get it to pull up here. Anyway, that's not pulling up right now. So, anyway, so that is that pool, and I guess it disperses. Okay, interesting. So, let's go back out this way, and let's go back to pools. And so if I want to establish a pool, let's see here, what is this one? I don't recognize that symbol. And then synthetic US dollars, and it looks like a Binance stablecoin. Yeah, Binance USD. Oh, Rai. Raiden? Yeah. That's kind of a layer 2 Ethereum platform that I haven't looked in yet. I'll have to look into it. But it only has $1 in the pool right now, so I guess somebody's trying to get that started. So anyone can create a pool, learn about community prize pools here. All right, so we'll learn about that. Now possible for anyone in the world to deploy a no-loss prize pool for any token. No-loss prize games are one of the most popular consumer financial products in the world, combining a chance to win prizes without risking your deposit. Currently, over $100 billion is saved in no-loss prize games by tens of billions of people globally. Now there's a true DeFi primitive. Just as anyone can create a Uniswap trading pair with a balancer pool, anyone can deploy a no-loss prize pool with the Pool Together protocol. They have three key characteristics: no loss, the ability to withdraw funds at any time, and the chance to win prizes. And prize pools are differentiated with the token you deposit, the yield source generating the prize, and the way the prize is distributed. So interesting, and anybody can create it with a prize pool builder. It supports the compound protocol, and I believe it also some of the pools support the Y-earn protocol as well that I read. So interesting. All right, so I'll put all these links in the video description. Time for me to do my deal and get my day going. But yeah, it's been, like I said, 2 years since I've looked at Pool Together. It's not on DeFi Pulse, which I'm wondering what is the deal, man. DeFi Pulse is leaving off some important DeFi stuff like 1inch and Pool Together. So why? So it's on DeFi Llama here, but it's not on DeFi Pulse. So Randy says APY.vision all-in-one liquidity pool analytics and yield farming rewards tracking tool. Oh, okay, that's good to know. So that timed out for me. I'll have to look back into that. So I guess it's a tracking tool. All right, well, I will talk to you guys tomorrow, and have fun with Pool Together if you do it. I'm glad to take a look, and thanks for suggesting that yesterday. So it's nice to jump back into protocols that I kind of forgot about. All right, well, yeah, I'll talk to you guys tomorrow. Bye.